Good morning, everyone. Welcome back to our trading room, our Wednesday morning trading room. All right, hold on a second here. We'll get the charts going. Okay, yesterday, the market tailing off through much of the morning session. This is now the daily chart for the NASDAQ. And then kind of settling into a little bit of a sideways drift, which is not all that unusual for a market to do. You can see here this morning, however, relative to where we closed, the closing bar down here, and now opening way up here, we have a rather large downside gap below the market. We'll see whether they try to fill that or not today. Certainly, we're off to a very, very bullish start looking at the combined session, the overnight, and this morning's open. So right now, the market with a much more bullish flavor to it. And you can see all our charts are in sync. We've got some bullishness across the board here. Some nice signals right out of the open. Here looking at the first eagle signal occurring right on the opening buzzer. And looks like the market got up high enough to find its profit objective. So a nice way to start the day there. I think I'm going to give them a few minutes here to settle in. Opening range, always a tricky time to trade the market. For those of you who went looking for my podcast yesterday with Top Step Trader, anytime I'd done a presentation with Top Step, it's always been live. But I guess now, because it's a podcast and not a live trade show, they record it. So it'll be coming out in about a week's time. I'll let you know the link for that so you can go listen to it if you want. Glean some of the pearls that I'm tossing out. It's nothing you haven't heard before. Eddie and I spent some time talking about the importance of money management, my feelings on risk-reward ratios. Actually, today, while I think of it, why don't we take a little bit of time and we'll look at the proper way to do risk-reward ratios. The way everybody thinks to do risk-reward ratios is wrong. There's no nice way to put it. It's just wrong. It's bad information. And yet it's regurgitated all over the internet. I suppose it makes people sound smart, but when you try to use it in practice, it doesn't work. It's not the way the pros use risk reward anyways. All right, while we're waiting for our next signal, let me go over the problem with risk reward ratios for you. Those of you who haven't enjoyed my risk reward rant. Here's the problem with risk reward ratios. You look at a trade like this, the market's looking bullish. You're looking for an opportunity to buy. What's going to stop you? Well, what's going to stop you is your risk reward ratio, because you're going to look at this trade and you're going to say, oh, double top, this, let me make this bigger. Double top, this right here is my reward. Therefore, I need to have 3-to-1 reward to risk. I need to make 3 times as much money as I'm risking on the trade. Therefore, there's my stop loss. Now, 2 problems with this. Problem number 1. Why would you base your trade on a part of the trading equation you have no control over, namely the reward side? Why would you say, yes, I'm going to take this trade, no, I'm not going to take this trade, based on that? Makes no sense. No sense whatsoever. The other problem is it forces you to leave an abnormally tight stop. Yes, this stop may well work, but then again, it may not work. You're placing your stop right within the market's grasp. So you're actually decreasing the probability that this trade is going to work out. You're lining yourself up for a loss. I don't care if it's a smaller loss than if you placed your stop down here. The chances that your stop will be hit right here is very good. Certainly better than 50-50. Probably maybe even as high as 80-20 if I had to, pull some numbers. What do you think the odds are your stop will get hit down here? 50-50? No, not even. I would say it would be much more like, maybe 30% that your stop will get hit right here without at least one opportunity to adjust your stop. I'm not saying the trade won't reverse and tag you out. What I am saying is that your stop getting tagged down here, there's a very minuscule chance relative to having your stop right up here. But what's the opposite side of that coin? What's the chance that you will be profitable, that you will hit your profit target up here? If your stops are down here, well, probably very good, because chances are you will hit your profit target before you hit your stop loss. What are the chances you will hit your profit target if your stops are right here? To maintain that fictitious 3-to-1 reward to risk ratio. Probably not that good. Chances are your stop will get hit before your profit target. All right, so there's the problem with risk reward ratios in a nutshell. The other problem is you look at this trade and you say, oh, no, I can't, I got to put my stop down here to be reasonable. Eric says, leave a reasonable stop. That this is a backwards trade. I'm risking twice as much as I'm making. Therefore, because I'm such a smart fellow, I am not going to take this trade. So then your fictitious risk reward ratio leaves you out of the trade. Well, you know what happens next, don't you? The market takes off like a shot and you can't find another place to get in. You missed your opportunity. Why? Because of some fictitious risk reward ratio. So, no, I am not a fan of risk reward ratios at all. I think they are detrimental to your trading. I think trading comes down to one thing and one thing alone, and that is risk control. If you can control your risk exposure, and the trade can be set up in such a way that you can afford it, you take the trade. It's as simple as that. Honest. That's it. Simple as that. Okay, let me show you now how pros do risk reward ratios. They'll look at a trade like this and they'll say, it looks like the market's in a bit of a downtrend. Let me see what happens when the market breaks this support zone. Okay, so the market breaks, and sure enough, there's a retest. And now the market starts to move in your favor again. So what does the professional trader do? Well, the professional trader looks at this and he says, that is my risk. That is how much the market moved against me. Therefore, if that is my risk, if I'm going to take a 2-to-1 trade, that's one. That's two. Okay, that's going to be my, oh, sorry, here. We're going to do a 3-to-1. This is your risk, because if you entered here, this is how much the market pulled against you, sorry. You can do it the other way too, but this way is a little bit more effective. Okay, so there's one. There's two. There's three. There we go. All right, so remember what the premise was here. If we entered on a breach here, how much does the market pull back? Well, that's how much it pulls back right there. So our entry was here, it pulls back here. This is how much you would have had to risk to make this trade work. Notice, risk reward is a fluid thing. It's not a static thing. You calculate your risk as the market shows you how much risk was required. So you play it forward. Oh, okay, there's your 1-to-1. You just hit your 1-to-1 target. You play it forward. Oh, here now your 2-to-1 target. And here now your 3-to-1 target. And note the reaction after hitting your 3-to-1 target. Boom! Up she goes. That's because the pros knew. The pros got out. Now, like I said, there's two ways you could formulate your risk reward. If I had done the larger square, I would have hit my 2-to-1 target or a 1-to-1 target. So either way works. But if you're wondering, well, how come I hear all this stuff about 3-to-1? This is how you calculate your 3-to-1. It's a fluid thing. Now, a lot of times I don't worry about this because a lot of times I like to take profit on target, right? It's nice to look at a chart and point this out and say, hey, look at how well this works. But in all honesty, how many of us would have been able to tolerate this kind of volatility, right? Chances are very good if I was in this trade, let's say I even wrote out a little hiccup through here, you know me. Once the market started reversing again, I would have brought my stops in and I would have said, thank you very much. And I would have looked for another opportunity to get short rather than try to ride out a monster swing. but the principle remains the same. So this is the proper way to calculate your risk reward ratios. And how many times have you heard about that on the internet? I'm guessing none, because like I said, everybody just regurgitates all the stuff that's out there. Yeah, see, the market hit down there, boom, up she goes. But also note, to do that type of trading, how patient you have to be. You have to wait and see what the market is doing. You've got to wait for the breakout, wait for the retest, risk getting in a little bit late. That doesn't fall into a lot of traders' wheelhouses. Patience is something most traders are in desperate shortage of. All right, we're getting a little bit of a reactionary move now. Maybe the market trying to slip into that opening range gap. This is why a tool like the trade calculator is so important, because what it's going to do is it's going to contain your risk. Right? We've maxed out our risk exposure here to a percentage of our capital. So let's take a look here now. If this was a breakout we were looking at, if this was a little bit of a sideways range, now let's take a look and see pardon me, what kind of reaction we may get. How strong are the buyers? Will the sellers come back and produce another short signal? I'm sure they will. We're going to get a early early number one signal, a cloud crossover signal here on the Raptor. We already have a first micro macro cross here to short on the Hawk, and we did produce a trend change signal as well on the Falcon. Now here with the Eagle, what you can do is, because we've breached, and this now is the reaction to the breach, you could put your just in case the bottom falls out of the market order below that low as we wait on the next signal. Okay, so assuming for a moment that this is going to be the risk amount. Oh, sorry, see, I'm so used to doing it the other way. Okay. Assuming that will be the risk amount, stop it. There's 1. There's 2. There's 3. So that could be a monster move. So I'm not going to go all the way down there, but let's throw a profit order down here now. We're working a possible rule of three signal here on the eagle as well. The rule of three signal being your counter trend signal. So we've got a trend, and now we've produced 1, 2, and we're about to produce signal number 3 against the trend. Now, with the rule of three signal, you can be more aggressive. You can take it right on the hash mark, right up here. You can also use it just as an early warning that the trend may be reversing. So there, now the third signal. I think I'm going to change the colors here on my eagle as well. The hash mark, I'm sure, is probably a little bit difficult for you to see on your monitor. With the rule of three signal as well, you have to remember, because it's counter trend, it's very, very important that you have a test of the extreme, that you see the market try to recover the uptrend and fail. And you know what? Here, I'm gonna be a little bit more aggressive on this. I'm gonna take it right close to the hash mark. I'm gonna cover my position up here. I could do all this with the trade calculator as well, but we're trading very, very close to where I want my entry to be. And this will give me a little bit of time to refigure my Yep, looks like that'll be just right. Perfect. Okay, assuming, of course, now the sellers can drive the market lower off this potential rule of three signal, potential reversal. The other tool's a little more conflicted right now. It's looking like the eagle may be the most decisive here at the moment. I'm just moving that stop loss order out of the way, because the thing you need to remember with the trade calculator now is these orders are live when you put them on your chart. You could bracket this trade. There's certainly an option to buy it off of the hard edge. We're going to be producing both a hard edge bounce here on the eagle and the raptor, and potentially a buy signal on the falcon as well. That would certainly be more in line with what appears to be this morning's trend. All right, so we're short now. I will bring my stop loss in. And let's see how we do. Okay, they're thinking about it. Certainly, if we can take out this swing low, it should encourage a little bit more selling. Oh, thanks, Ray. Ray says we've got an FOMC meeting today at 2 p.m. Yeah. Mark's comment, coil, breakout, rinse and repeat. That's the truth. That's what markets do. Okay, not a bad start. We're making some progress anyway. Now comes the tricky part. Okay, we've got a fair amount in open profit. How much of this profit do we want to preserve? You see, we would have hit our high probability target. I'm going to, well, you know what? I'm going to start rolling bar for bar. I'm not going to give them too much more here. This is the challenge with running a big profit objective, is you've got to be patient. You've got to be really patient. A little bit more patience I'm afraid I have. If I got $200 on the board, you know, I don't want to let that get away, because $200 is certainly above my daily quota objective. So here in one trade, I have made my trading quota on a single contract. If I can build my account to the point where I can take 2 contracts, that's $400. 6 contracts, that's, or pardon me, 3 contracts, that's $600. 5 contracts, I just made $1,000 trade. And that's where the secret sauce is in trading, if you will. Now, just out of curiosity, so our risk was looking something like that. So was that a one-to-one move? That kind of looks like a one-to-one move before we got the reaction. Chances are the market will try to continue lower, but you know what? I'm just as happy I took my profit. Look at what would be happening, actually, before we leave the Eagle chart. So I was short from right about here. Okay, so now this trade becomes a bit of a management headache as the market retests the breakout. Where do I leave my stop? Do I bring my stop to break even, or do I leave my stop up here? Well, unfortunately, the best stop is the one up here. But that takes a lot of nerve. It looks like had I rolled my stop to break even, I would have been okay. But it would also, I'd be kicking myself in the pants if the market came up here, tagged me out at break even now, because I'd had $200 in profit. I like to use what I call the sidewalk test. If you're walking down the street and you see $200 laying on the sidewalk, do you stop and pick it up? If the answer is yes, then I think it's probably a good idea to take the profit when you have it. All right. Well, we certainly had comparable signals coinciding with that Eagle trade. We had the nice little first micro macro cross right here with some excellent follow through here with the Falcon. We had an early trend change signal, the proper trend change signal occurring right here a little bit later, but still giving you enough room to find your profit objective. And that also coinciding here with the cloud crossover signal on the Raptor. So across the board, getting some decent signals there to take advantage of. Those are the kinds of signals, those are your cherry picking signals, right? If you're on a trade quota, and I know I'm kind of beating this horse, but it's such an important concept. If you get yourself to the point where you can identify those better opportunities, you don't need to trade often, right? You only need to trade 2 or 3 times a day maximum. And it gives you more confidence in your trading as well. So when you get these follow-up signals, you can say, yeah, okay, I'll short it again. In fact, I should have done that. It looks like we've got down now to the second target. Why don't I just leave this up here? Wouldn't that be smart? I wonder, can I copy that? Oh, look at that. Shoot, Eric. Can I only copy it once? What's going on? There we go. I'll get the hang of this yet. Okay, so based on our targets, here was the 1-to-1, here is the 2-to-1, and if we're going to get a 3-to-1, there should be another short in here somewhere. So 66.90 looking like the big target. And how much you want to bet we have a resistance line near there? Oh, look at that. The median line parked at 66.84. All right. We're kind of getting really, really close to 66.90. So if you want to take advantage of this move, I would think you don't want to get ultra aggressive on it. You know, we can take a look at it here on the oh, shoot, that's not right. Okay, I was going to say take a look at it here on the what am I doing here? The hawk. Okay, let me get my stop out of the way there. So essentially a macro pullback signal, or the second push on a macro pullback signal, and just looking for a quick little scalp type trade here. Trying to get the market down to the 66.90 zone. Now the ideal stop for this is actually up here. If I can get a couple of bear bars in my favor, there we go. All right, let's see them break the lows here now, and that will give me a good excuse to bring my stops up. So now I'm 2 swings back. This is swing 1, that's swing 2. Oh, they keep hesitating here at around 66.96. See, the buyers know. The buyers know this whole 3-to-1 thing as well. They know where the sellers are trying to push the market to. Okay, last chance for the sellers. They got to get it, something going on here. Oh, the buyer's definitely looking a little bit stronger. I have a feeling this could be a little bit late in this trade. Yeah, I think I'm going to get tagged out here in a second. Yeah. All right, that's okay. You know what? It just kind of demonstrates the principle of the whole risk reward type thing. Now that the market seems to have put in a little bit of a bottom, though, I would be open to the possibility of a buy. So we're getting a warning dot for our first micro macro cross to buy. And what I'll do is I will throw my order in above here. So it's essentially going to be like a second push opportunity. I can adjust this. I'm going to take this stop out of the way. Here now, the first micro macro cross to buy. All right, and I'm going to try to stretch out my profit target a little bit now. And I'm going to adjust my profit target here in a moment. So here was the breakout. Now let's see how much heat we need to endure. Well, not much in the way of the pullback department just yet. All right, let's take a look here at our support and resistance suite, and we can see, okay, that's all right. 67.24 quarter is a resistance zone that would make for a very nice objective. We're getting a lot of hesitation now that we're back into the hard edge, of course. Let's go back here to the hawk. Not a lot of love here at the moment, and probably because of the FOMC minutes as well. The market is going to start to fizzle. maybe. Oh, don't tell me they're going to make a run at 66.90 after all. Typically, when you break a swing point, that's a good time to anticipate the market trying to head the other way. Okay, I'm going to park it just on the other side of 66.95. All right, if in fact this is now going to hold, that's our risk amount. So that would be zone 1. And that would be number 2. And you can see number 3 up there. So I would adjust that something like so. Okay, we got a little bit of giddy up. Going to produce another first micro macro cross. Come on now. This is also the breakout and the retest on a smaller scale here now on the hawk. If you have the patience for it, the best time to roll your stops is after each swing. Now, again, you don't want to start micromanaging your swings. I wouldn't necessarily consider this a swing, which, again, how many of us have the patience to endure that type of trade? Let's get a little giddy up. Wow, they're really stuck. They should be going higher. They want to go higher. There we go. Okay, now we're starting to get to that ouch point again where we're starting to get a fair amount of open profits. So I'm going to start to trail a little bit more aggressively. The closer we get to the profit target, the more I'll try to protect. If you wanted, we could do an exercise here and just see how far we could run this out, this being the 2-to-1 target. Where was my 3-to-1 again? It was, I think, near 24, wasn't it? No, not gonna give it to me. See, there's a little bit of early profit taking as we got closer to that 2-to-1 zone, which I suppose is to be anticipated. So if I hadn't taken my profit on the first trade, or if I hadn't stopped trading after the first trade, I certainly should stop trading now because I have my 3 trade quota. I'm profitable for the day, and that's it. I'm done. Thank you very much. Kind of putting the brakes on here a little bit again. These little mini swings as the market grinds back and forth but doesn't really do anything. Here the daily chart again. Kind of been typical of the last few weeks as we are still within this sideways trading range from around 6,600 to just below 6,900. Well, we are getting some follow-up signals now. I see we have a number one signal here on the Raptor. We've got a trendline touch signal here on the Falcon. There's nothing wrong with this number one signal. I would prefer a second push opportunity. The stops need to be really deep, though, to make it work. And just overall, just watching the bars unfold, you can see the momentum kind of fading. Oh, getting a little bit of an uptick. We'll see how much follow through there is from that. And so far, not a whole lot of follow through on that signal. I think the market must be waiting for either the FOMC minutes or another tweet. We'll hang with them here for a little while longer. It's only the bottom of the hour after all. And yeah, the sideways drift just kind of continues. I wouldn't be surprised to see the Raptor actually produce a number 2 signal from here. And the market just continue in the sideways funk overall, retest the bottom end down here around 66.95. Oh, speak of the devil, there's that number 2 signal right there. Okay, here now with the number 3 signal. We are getting some serious back and forth going on, aren't we? If we take a look here at the broader view, I don't know, do I want to call this a trading range down here? In which case, this was a retest. This now the buying opportunity. Excuse me, folks. Wow, it's a little early in the day for scammers to be bothering me. I better phone them back in a hurry or they're going to disconnect my internet. Mm-hmm. All right. Well, we're getting a hard edge bounce here on the Eagle. I don't know how aggressive I want to be with this buying opportunity. The market, like I said, really kind of conflicted here at the moment. It's really balanced. Like, what do you say? If I had well, you know what? I could always just throw my just in case order above there. I could throw a just in case if I want to pinch it. I could throw a just in case order below here, below that little swing, knowing that the market either has to continue higher or it's going to fall back inside this sideways trading range. If we see a couple of bear bars form here, a couple of lower bars, then that will enable me to bring my entry order in somewhat. So if we break down a move back toward the lows of the day, entirely realistic. So you could throw a profit order down there. If we continue higher, then a move back near the highs of the day, also very realistic. And there we go. We have our bracketed type trade. All right, let's see what they got now. If in fact they're going to continue on that attempted breakout higher, I really think that Ray is right. The FOMC minutes pending are kind of putting the nix on the market doing very much right now. And no giddy up. Yeah, Ray, you got the right idea here. He says one of my trading rules for a while now has been not to trade FOMC days. And this is why. Because a lot of times the market knows what to anticipate regarding FOMC releases, but sometimes they don't. And so they're just not going to commit. And that's what we're looking at now. We're just looking at a dead sideways market. And there's nothing you can do about it except, well, avoid it. You can always do that. There's nothing wrong with, being picky. Picky is good, especially when you're trading. All right. Well, we are kind of winding down the morning a little bit here. Traders starting to look like they're not going to continue the breakout. In fact, I suspect they're going to challenge the bottom end here. Ideally, the right stop for this trade, if you're going to go 2 swings back, is way back here. That at least gives you a chance on the trade. And then if we can get a couple of bull bars in our favor, then of course you can bring your stops up again. But don't let this amount down here be something you cannot afford. That's a surefire way to screw up your account. And so we sit and wait. All right, gang, we're going to button up shop here in a moment. If you are trying to take this market long, like I said, look for the buyers to come back into the market and use that opportunity to try to roll your stops up a little bit. I have a feeling, though, the sellers are going to make a serious push. If we shoot a trend line down here, they could try to take the market back here to around the 67.04 zone, which looks like is what they might be attempting to do right now. But otherwise, you're probably best avoiding the rest of the day because it's going to keep being a sideways mess until those FOMC minutes are released. All right, everyone, I will catch you again tomorrow. We'll talk to you then. Bye for now.